In this second video on the tax formula for individuals, we will continue to discuss how the taxable income is derived and then the tax due or refund. So far, we've discussed gross income, deductions for adjusted gross income, and then magic line, adjusted gross income or AGI. Then we would take the greater of the two itemized deductions or the standard deduction. Now we've come to qualified business income deduction, which is another type of deduction below the line. We will not focus much on this as most of it relates to business. At this point, we've arrived at taxable income, the amount of income that is subject to tax. Amount of tax is based on a tax rate. The U.S. has a progressive tax system, meaning that there is a tax bracket or tax range. The higher an individual falls in the tax bracket, the higher the tax rate. There are 7 tax bracket rates: 10%, 12%, 22, 24, 32, 35, and 37%. Not something that you have to remember, but it's good to know. There are 7 tax rates. Lowest is 10% rate and the highest is 37%. There is a tax computation worksheet in the back of the book, but even easier is a tax table. Both are in the Appendix A. Here's Appendix A. It contains the rate schedules and the tax computation worksheet. Tax table. As you can see, the tax table goes up to income of $100,000. So 100,000 or more, we must use the tax computation worksheet. We saw that earlier, which is here. Using the tax table is easier because the tax computation is already done. It provides us the tax liability based on the tax filing status and the taxable income. Next item in the tax formula are tax credits and prepayments. Let's start with prepayments. This means that the individual had already paid income tax or paid a portion of income tax already. This is from, like you, if you work and taxes are deducted from your paycheck, withheld. It is paid to the IRS by your employer on your behalf. Your employer sends you W-2 form at the end of the year to inform you of how much was paid on your behalf to the government. You use the form W-2 to know the amount of tax prepayments. Prepayments goes on your individual income tax form. Prepayments reduces your individual tax liability. Likewise, credits reduces the individual tax liability. It is a direct reduction in tax liability. This doesn't reduce taxable income. It's a direct reduction of the tax owed. It's almost like free money, if you will. For the year 2020, some individuals almost received a stimulus amount from the government due to the pandemic. This is actually an advanced credit. Individuals received money, but if they had not, then at the end of the year, they would file the income tax return and receive the tax credit for that filing year. Credits are granted by the government. An example is child tax credit. Anyone that has a child may get a reduction of tax owed by approximately $2,000. The amount varies from year to year, so check the appropriate amount for the respective year. Finally, the end of the tax formula, which is the tax due or a refund from the government.